Hey, y'all, welcome to another episode of the Texas Blockcast. This episode is a long time coming. I'm sitting down with Mario Gutierrez of Giga Energy. If you have spent any time in the Bitcoin mining world, you know Mario. He's been around a while. I think the first time you and I met was at a bar after NAPE, right? Or sometime in Houston.
I think it was at NAPE. I think that's where we met for sure. Definitely.
And there was a guy who you're friends with down in Houston who was there with us. You know what I'm talking about? Suave guy, black hair.
Oh, Mo. Yes.
Oh,
Yes. I do remember him. And Javier. We all got dinner, I
we
believe.
did.
Yeah, yeah,
Yeah.
yeah. Great.
And Mo is like, if you ever connect with him, you'll be instantly like, charmed, if you will. He's just a suave dude. And I remember that dinner being a lot of fun. But before we reminisce too much, Mario, tell us a little bit about your background, how you came to be at Giga,
Sure.
and really a little bit about the story of Giga. I think people are familiar with it on the cursory level,
Right.
but I mean, we're going to be talking about infrastructure and just things that people may not be aware of about Giga.
No, definitely. Happy to do so. I'm originally from Colombia, but a longtime Houston resident. Live in Houston right now. I before I pivoted into the Bitcoin mining and energy space, I was what I tell most of my friends here at the office, a rock licker. I was a geologist in oil and gas. Went to school for a long time there to study kind of where how we could get more oil out of the ground. And it was at ExxonMobil, and when I was at the technology unit there, that I saw Crusoe test one of their pilots out. And that's where kind of my understanding of Bitcoin previous to that, which was much more speculative and, kind of more, naive, went into a kind of energy infrastructure, energy, ecosystem disrupting type of lens. And so fast forward from my days at Exxon to now, I spent time in, Bitcoin custody. I've spent time inside kind of traditional energy finance, done a lot of consulting, and I've known the founders of Giga Energy over the last few years, Brent and Matt, who are some of the most impressive people that I've ever met. And
Yeah,
as,
they're younger
as
than both of us. We should
that's for
say.
sure. I'm the gray hair at 30 years old here at the shop, which is a great a great experience. And as Giga, who's been active since 2019, started to really kick off over the last 12 months. They gave me a shout out to see if I'd be interested in leading their business development efforts at the shop, and I'm really excited to be on along for the ride. Giga Energy, they've been around since 2019, started the shop out of their dorm rooms, super impressive, with a focus on flare mitigation. And that's been the legacy business line that Giga has built its brand on, is continuing to kind of build its expansion of operations on. And I think that's one of the really important narratives that I think with the traditional oil and gas industry is, methane mitigation, gas monetization, many of these really interesting projects that many of our friends are doing in the space. And as they were, building these projects, kind of firsthand, they were able to see the, existing challenges that apply not only in Bitcoin mining, but in data centers and energy infrastructure when it comes to supply chain. So, they couldn't get their data center fast enough. So they built a data center first. They couldn't get the electrical components fast enough. So they started sourcing them themselves. And kind of that ethos of Bitcoin being a catalyst on how to kind of go from how do I just turn on an ASIC to how can I optimize and disrupt, kind of going up the value chain, has really become an ethos here at Giga Energy. And so kind of fast forwarding, not only do we do mobile power generation and Bitcoin mining to mitigate flare gas, and happy to kind of dive into some exciting stories there. We also have entered the energy infrastructure space, which not only do we think allows us to have an advantage from a Bitcoin mining perspective, but also address what is a very archaic business, and when it comes to large scale transformers, breakers, substations, as well as designing the data centers ourselves. And so when we partner with somebody, or somebody's looking to buy one of our pieces of infrastructure, we like to tell them, hey, we run the stuff ourselves. We're doing all the improvements for ourselves as well. And so I think that's allowed Giga to become a quite unique actor or kind of market participant, where we can help people scale their business, but then also kind of look to scale internal business lines ourselves. Not only do we have flare gas mitigation sites for Bitcoin mining, but we also have kind of traditional on-grid co-location sites that are a little bit kind of more familiar with perhaps the audience and when it comes to grid type power. And so, at a high level, infrastructure is the name of the game for us. We think that's where our advantage is. And we've been able to establish offices across the world, but our headquarters are here in the energy capital, Houston, Texas, which we're very proud to be part of.
Well, I think you said it well when you said infrastructure is the name of the game right now. There's a lot of people that can plug in an ASIC. Heck, even I can do that, and have done it
You have
successfully
to stay
and
warm
unsuccessfully.
somehow in the winter, right?
Yeah, and mined at 7, 8, 9 cents a kilowatt hour, sometimes unprofitably, right? But um, the comparative advantage, or I guess y'all's competitive advantage, if you will, is this understanding of a high demand choke point. It's electrical infrastructure, it's rack space, um, and I think even more than rack space, it's electrical infrastructure, and it's sites that can be interconnected. Um, you know, you guys have obviously off grid as part of your founding story, but you're now on grid a little bit too. Off grid is only constrained by the amount of good gas, right? That's has the right flow, and you could probably tell the audience more about that. But on grid is very much constrained by load studies, transmission constraints, um, infrastructure
That's right. That's
constraints.
right. And definitely happy to dive into the oil and gas segment for a little bit, but kind of riffing on the on-grid infrastructure with, let's say, the added interest from data centers in this part of this Bitcoin cycle versus, let's say, when we all kind of started, kicking around in the last cycle. That's really added to the pressure of how much more generation capacity can be put online, right? You'll hear reports that data centers are going to be 4% of the world's total power consumption by 2030 or something like that. And so the real choke points are in substations, in breakers, in 200-week lead times, that if you can make them 50 or 100 weeks, you're disrupting, right? That's the disruption. And so that's where we're playing. Not only are we servicing traditional Bitcoin miners and data centers right now, but also utilities, right? Where their traditional procurement arm said, hey, we can get you something in X, we can do it in half X time. And we find that to be very exciting, because as we know, the grids are starting to become more, less predictable or more volatile, as a large amount of intermittent sources of energy are coming online. Sources like coal are starting to get decommissioned. And so when we look at base load, while nuclear is a dream of all of ours, at least in our lifetime, natural gas tends to be what we're looking at from a steady base load. And so, if we're able to put more capacity online and address that kind of infrastructure chokehold, that's not only a net benefit for Bitcoin miners like us, who can get online in 12 weeks, which is kind of the fast, quick sport that we're playing, but also for larger off takers, and for the overall kind of needs of the ERCOT or any ISO's consumer base. That's also very beneficial for everybody. And so that's why we're very concentrated there. That's really exciting for us. To talk about oil and gas and Bitcoin mining, real quick, since Giga's, that's kind of Giga's bread and butter and kind of legacy, foundation. As we know, some of the regulatory headwinds around flaring are really starting to be priced into P&Ls and oil operators. Our conversations from last cycle to this cycle are, hey, it's not how much you can pay me for my gas, but how fast can you be on my site, because I know you're going to save me 30 to 50% of my operating margin by allowing me to avoid all these EPA fines that are coming down the pipeline, right? While being able to maintain my oil projections, my production projections for oil and gas, which is, if I'm a private equity backed company, if I'm a public company, I need to be able to mitigate my flare while still pumping out more juice to the market in order to kind of meet my investors' goals. And so that's the kind of conversation we're having right now. It's not, hey, before it was, can I buy your gas for 50 cents? Now it's, hey, we're going to have this drilling program in the next year. Our GORs, which are gas to oil ratios, are starting to change. The pipelines can't take this gas. As you might have seen, the Permian has negative gas right now. So, what other technology can take all this gas in a flexible manner than Bitcoin mining, right? And so that's the big story with oil and gas that is very motivating for us right now as well.
So Mario, I actually was not aware that the Permian had negative gas right now. Is that the Waha market in the Permian?
That is the Waha market in the Permian. And so, when people usually talk about gas markets, they'll use Henry Hub, which is kind of the national basis, which then, you'll have very localized discounts to. And in the Permian Basin, it's the Waha hub. And because, for a lack of better words, the rocks are getting gassier because they're drilling from what used to be more oily, acreage to less oily acreage. Always good to have a geologist, in your speed dial to ask those questions. As that liquid comes out to surface and separates into oil and gas, now there's way more gas than they thought there would, and so the pipelines can't take all the gas. And because now, so that typically they would flare that gas. But because now we're having regulations on how much you can flare, potentially now it's going to limit how much oil can be produced. And so gas is going negative because they would pay for you to come take it.
That's wild. It's similar to the distortions in West Texas around wind because of the $30 megawatt hour subsidy. Now,
yes.
Help me with the geography here. Obviously, Permian, out Midland, Odessa area. Where is the cutoff to where you're getting is Henry Hub what you would get if you were like a North Texas, Oklahoma?
So great question. So Henry Hub, I believe is in Louisiana, like the actual Henry Hub is in Louisiana. And then you'll have other benchmarks like Houston Ship Channel and other kind of localized benchmarks. But Hub tends to be kind of national average. But once you're speaking along lines of more localized gas markets, you'll start to use local benchmarks.
So the worst local benchmarks are the ones that are geographically furthest from a port.
Or some type of, or where there's some type of natural, natural or
pipeline constraints. Got it.
That's right. And so, if I'm in the Rocky Mountains in the Uinta Basin, right, and Kinder Morgan's going to curtail me on my gas for some reason, that the gas is going to go locally negative there. Same in the Bakken, right, where there's not enough takeaway for gas, it's going to go negative there as well. Yeah.
Is Waha the worst in the U.S. right now? Probably.
Right now, just because of the amount of production that's coming online in the Permian. And so, just a little bit of increase in the gas ratio adds a lot of gas to the market. Yeah.
And there's really not enough Bitcoin miners to take it all right now. I'm starting to get some inbound inquiries. And I remember calling you a couple of weeks ago and you were like, hey, we're too busy.
It's a fortunate problem if you're out here deploying projects, but it's an unfortunate problem if you're an operator with real, real-time needs. And while there's definitely a theoretical limit on how much Bitcoin we could deploy, Bitcoin mining we could deploy to the Permian in this type of application, the real bottleneck is power generation, natural gas generation, right? Because that's needed by hospitals, it's needed by the oil and gas industry itself, it's needed by anywhere that has those types of needs. And so you have a year, maybe 2 year lead times for new generation, and then for old generation that can be a very kind of complex market as well. And so if anybody selling a generator, let me know in that regard.
Yeah, and it's just fascinating to think about. We've got all this energy, we just can't get it to the right place at the right time. That's the giant constraint. It's like the average American thinks about energy in completely the wrong way.
Yes.
It's not about how much there is. It's about where it is and at what time is it being delivered.
And when is it available, right?
Yeah.
And if it's not always available, then the entity making it available is going to have to price that in right? Or who's buying it, and kind of, when we switch on our lights at home, after we close the garage, we don't really think about what it took to get that electron there, right? And if Bitcoin mining's done, I think something for even a lot of energy professionals, right? There's a lot of energy professionals in oil and gas that work here in Houston and are learning more about this. I think it's really, allow them to even have a more holistic understanding and literacy of energy in that regard as well.
Well, let's shift a little bit to the infrastructure conversation. This is one that I'm looking to you to educate me and the audience on, as I think this is an area of growth for our industry, because people in the cloud computing industry, AI, hyperscalers, et cetera, they have near unlimited capital to deploy. And the fact that the mining industry has been working here for a couple of years and has a lot of greenfield sites, a lot of knowledge, a lot of infrastructure already in the ground, and even like load studies approved for on the on-grid side. I am very much of the belief that that is going to be a very valuable resource, that there will be bids, acquisition bids for some of these sites, some of this infrastructure, perhaps even an acquisition of an entire company because of what they're sitting on and what they've kind of gone out and what did you call it earlier? The wildcatting,
It's somewhat of a wildcat well.
the wildcat well. It's like experimenting and
Yeah,
validating it.
it's an analogy I attribute to our good friend Gideon Powell, who, a Bitcoin miner with that, exploration mindset, that risk-taking mindset, will go to West Texas, wrangle the land, put the load study up, put that money up, do the first initial amount of infrastructure to test and create those positive relationships with, with Encore, with the utility, whoever, with, the retail, the rep, whoever it may be, with the local community, get those first, 10, 20, 50 megawatts online. And then by the time an Oracle or an Amazon comes by, those aspects will already be de-risked. And then so I agree with you that Bitcoin mining is not so much competitive. I think there is an immediate competition to the hyperscalers, but I actually think it's more of a complementary relationship where Bitcoin miners, because we work so fast, our capital expenditure is a magnitude less, and our objectives are very different as well from a monetization perspective. We can help de-risk a lot of these sites in a monetizable way that then allows for the hyperscalers to come in on a risk-adjusted manner. They have unlimited capital, but they're not going to go, whip up, kind of all this land and build an energy campus by themselves, in a span of 3 to 5 years. That's not the sport they're in. And so they also have much longer development timelines. An on-grid miner may want to get online in 6 months. They're going to start doing shovels after 36 months, right? And to start to develop. And so an example I really like on how Bitcoin miners work with not just generators, but also the hyperscalers is the Talon Energy asset up in Susquehanna in Pennsylvania. And I think this is a great example for many of our peers in the energy industry to look at how Bitcoin miners can help develop traditional, data centers in that regard, right? If we look at it, it was a 2 gigawatt nuclear facility that, was having a hard time competing against some of the subsidized, intermittent resources in PJM, which is the ISO over there. And so one of the, kind of innovation or steps that they took were to partner with TeraWulf to create a 100 megawatt Bitcoin mining facility that was always going to buy that power, and it could flex the load to allow them to be a good steward of their participation on the grid. But what that also did was de-risk all the high voltage and more elaborate infrastructure being laid out around that first 100 megawatts, to the point where then they could go sell the next 900 megawatts behind the meter to Amazon Web Services, right? And Amazon Web Services would have never gone in there, or maybe would have taken too long for them, because they would have told Talon, hey, you haven't built down all the step downs. This isn't kind of, it's too risky for us. But because they already did that exercise with TeraWulf in the joint venture, it was financially and operationally more viable. And so now you have 900 megawatts of traditional compute, right? That's behind the meter at a nuclear facility. You have the Bitcoin mining there, which is, a flex load. And then you have 1 more gigawatt, to the market. And now the whole community gets the benefit from this nuclear power plant not being threatened from being decommissioned. What a win, right? And so I think that's a story that I think in ERCOT particularly, we can really tell and perhaps, also kind of promote in that regard.
Yeah, I've got a group that came to me a couple months ago and said, hey, we've got a new combined cycle, natural gas generation facility that is only made possible because of the economics of a Bitcoin miner that's co-locating with us.
That's right.
And I said, can I quote you on that? And they said, yes. So I'm not ready to say who said it yet, but
Sure.
they are preparing like a formal like statement on it so that I
Huge.
can take that to various elected officials, namely the lieutenant governor
Of
of the
course.
great state of Texas, and say, hey, this is actually incentivizing new baseload generation as well.
I think it's wonderful. I think whether you're behind the meter with renewables to act as a non-subsidized price floor, right, in West Texas, or you're acting as a co-locator to what would be a more competitive, peaker plant in next to Houston. I think what we're just looking at is new innovations that at the end of the day are going to be cheaper for whoever's paying for the power. And I think that's what we should all focus on here. Definitely.
100% agree. Okay, electrical infrastructure, help educate an audience on where the biggest constraints are. I mean, is it, we were talking before this about how the cost increases and the barriers to entry increase the closer you get to the substation.
That's right.
So where is the biggest constraint right now? What are you guys focusing in on? Is it like close to the machine? Are we talking like PDUs and switch gear, or are we talking transformers, substations, more up the
Yeah.
stack?
Yeah, I think great question. There's always optimizations in the supply chain at the PDU panel level. But where we are really, looking at opportunity in the market is at the low voltage transformer. So you say 13.8, 12.47, a miner is going to know that. That's kind of the voltage that they would want to take, from a distribution level sub. So you have your high voltage, you have, which can be at 345 or 138 kV. And then, you have to step down from there, typically to around 13.8 kV. And then a miner will bring their step down transformer down to like their boxes, right? Typically.
What do you step down from there, from the 13?
To like say 13.8 down to 415. And that 415, the ASICs can run more or less, right? And so a lot of the miners, have already looked, a lot of the voltage out there at 13.8 has already been, connected to. That was kind of last cycle. And so right now, a lot of the lead times are at that medium voltage, 69 or 34.5 kV, and then on the high end as well, 138. Because typically that infrastructure build out would be done by an Encore, as an example, and then it would be priced into whatever rate the Bitcoin miner would take at the low voltage. But where we're seeing a lot of demand, not only from Bitcoin miners, but also from just general energy companies, is procurement for this high voltage. That's where the needs are. That's what's needed in order to interconnect solar farms. That's what's needed in order to, build out, larger load centers. And so that's where we're concentrating a lot of our time, is not only for our internal projects procuring at 138 and 69 kV and potentially 33, 35, 34, 345, but also doing it for our peers as well. And it's a market that takes a long time. It requires a lot of engineering. There can be some regulatory aspects as well. And so being able to be fast can actually turn results, because you may be able to cut what was 100-week lead time down to 50 weeks. And that makes a significant difference for many people's projects.
So when you say the phrase transmission voltage, that's typically high voltage, right? 345
Right.
and then distribution voltage is that medium
That's right.
voltage. Okay. And so just for the folks listening and for myself, back briefing you on this a little bit, you guys are really specializing in this medium and high voltage area that requires step downs to the lower voltage for operations. Now, to me, that's transformers, right? That's like the
Yeah.
main bottleneck.
Transformers, substations, correct.
And substations are typically at medium voltage, or they
They can be
vary.
high voltage as well.
Yeah.
You can kind of, sometimes you'll have a high voltage substation and a medium voltage substation. Yeah.
The ones that are privately owned, like, you've got publicly owned substations and privately owned substations. The ones that are privately owned, are those more at the medium voltage, or are those high voltage as well?
Those are typically going from medium down to low voltage,
Got it.
right? And like a midstream company needs to, have some compression done. They'll build out from, Encore will serve them at 69 kV, kind of on the higher medium side, and then they'll step down from there, and kind of own that private sub. But I think there's an opportunity also to build out high private substations as well,
Really?
because it will then allow you to own, you're basically, it's a tolling exercise, any power that then you can serve to a data center or whoever may be in that
And
case.
the economics of that work because the utility is constrained in some way and can't meet that need. Is that right?
The utility has many mandates, right? They have many KPIs, and many of them are more of on a service-based perspective. And so they can definitely they do build out a lot of this step down infrastructure, but their procurement and let's say construction capabilities can be spread thin sometimes. And so you, as a private actor, if you're able to say, hey, got you, I'll tag in at 69 or 138, that lets them know that, they have a well-capitalized actor who can kind of get all the way down, but then B, saves time, most likely saves time, because, Giga's specializing in just doing that. We're not servicing 100 other loads in the region.
And on a private substation, are there any tariffs paid to the utility, or I guess their interest is seeing more power flow to that substation?
That's right.
Okay.
That's right. And I think it'll depend, I would have to go tag a specialist in that kind of in that topic. But at a high level, the more you own upstream, the less you're going to pay, in tariffs. Correct.
Yeah. But they're still incentivized because there's just more electrons flowing.
That's right.
And the portion of infrastructure that they own is being utilized at a higher rate, which is giving them more tariffs.
And we can be a flexible load as well, so they can call on us. That just adds even more load that we can flex as well. Yeah.
On the economics, just last question on this.
Mhm.
With the flexible load stuff, there's a clear benefit to ERCOT, there's a clear benefit to the ratepayer, clear benefit to the flexible load. Where's the benefit? Is there a benefit to an Encore or a CenterPoint when one of their loads is a price curtailer or is it ancillary services? I haven't really thought through that angle of it.
I think there may be a couple answers to that question. I couldn't give you a kind of, direct one that calls out. My assumption would be that, they would be continued to be paid the cost that they priced into the substation that they built out for the off-taker.
Got it.
Yeah.
And perhaps if you have a flexible load, I know this isn't the case yet, but eventually you can model it as non-firm. And if you can model a load as non-firm, then you can then you can utilize your infrastructure at a higher, I guess, capacity factor.
That's right. You can just use more juice, right? And then that they may be able to, let's say, recoup their investment on the building out of that infrastructure faster. Which balance sheet in a positive manner. Yeah.
Yeah, we've got to get that. I mean, I know that's a long game, but the FERC, NERC standards, ERCOT standards, as far as being able to model things as non-firm.
Innovating in this, I think in this part of the energy business is extremely challenging. I think we have, there's great work being done, but it's definitely a little, when you're dealing with federal agencies, it gets a little tricky for sure.
Yeah. Well, ERCOT's at the tip of the spear on it. I think if that problem is going to get solved, it's going to be solved by, some of the great engineers at ERCOT working with great engineers and very smart people on the private sector side too.
Agreed. I think Texas is we're the innovator that many of our peers across the country, and I would say across the world, are looking at. I think we have offices in the Middle East and in Latin America, And, while we get a lot of our attention for our flare gas activities, people are very interested on how, their grids can be optimized. And you have stories like Marathon in the UAE, right? Being able to, take, quarter of a gig load and then, kind of flex it back when it's needed by the population or whatever it may be. I think those are all kind of great narratives that we're seeing as well.
So Mario, as we wrap up, tell me what you're most excited about Giga specifically on the infrastructure side. Where, are you guys just producing more boxes,
Yeah.
serving as sort of like a service, oil field services company in addition to all this? Or are you more excited about like procuring, sourcing the transformers, the substations?
What we're really excited right now is kind of two things. First of all, we're hiring a person every day every week this year. So we're in a high growth mode. And so if there's anybody listening to this podcast that's interested, please reach out. We're trying to hire good people, Texans, here at the company. In addition to that, the flare mitigation story is growing naturally, but where we're really kind of putting, going all gas, no brakes is on infrastructure procurement and project development. And so, within, building the boxes or building, kind of rack space infrastructure, the hydro technologies that, direct-to-chip cooling applications that we're seeing being deployed. We're working on some very large projects right now with some of those types of partners, and just seeing, for example, the WhatsMiner U form factor and its similarity to traditional compute is a really interesting step that we're currently involved in from an infrastructure perspective. And so whether you're next to the Gulf Coast, in Texas, or you're closer to to West Texas, these technologies can be very beneficial from an infrastructure perspective. So very excited there. We're doing large scale projects there on that end from a technology development point of view. I'm very excited. And then also we're developing internal mining projects. And so we're looking to build co-location facilities and see how we can integrate with traditional compute facilities and kind of build out those capabilities as well. And so lot of things across the board, but overall, really exciting. And as I said, we're hiring. So, that's one of the more painful things. So I have to kind of say it from the rooftop, if anybody's interested, we have a lot of different roles open and we'd love to talk to y'all.
That's awesome. Mario, thanks for coming on the Blockcast. We look forward to connecting with you and your colleagues in the various conferences in the coming months. Where can people go to find out more about you and about Giga?
Sure. I'm on LinkedIn or Twitter. Just put Mario Gutierrez, Giga Energy, and you'll find me. GigaEnergy.com is a great place to just start to kind of get a 30,000 foot level view of everything we do. And hit us up at sales@gigaenergy.com. I'll send an email back to you.
Awesome. Thanks, Mario.
Awesome. Thanks, Lee. Have a great day.